Hello everyone and welcome to the weekly update with me, Richard Perry, market analyst at Tech Markets. Each week I take through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we've had this dollar rally, which kicked off on Monday morning. Will it continue? That is the big question. We've got a lot of US economic data, a lot of key tier 1 economic data that could certainly pull markets around, but certainly the interesting move has come as the treasury yields have started to spike higher, and that's sort of created a bit of a bear steepener on the US Treasury yield curve, and that is helping to drive that US dollar higher. The US dollar and the Treasury yields tend to go in fairly decent lockstep, and we're seeing that the 10-year yield pushing higher is a supportive move for the dollar. Now, we've got a lot of US data out this week. We've got the ISM data for manufacturing, non-manufacturing. We've got the Fed meeting minutes and also non-farm payrolls on Friday. So lots that could sort of move this dollar around. But it is a really key factor that we've seen at play at the moment, because the dollar has been weaker in recent times, certainly on the back of last week's sort of hawkish tilt by central banks such as the ECB, the Bank of England, and also the Bank of Canada, which had an impact across the markets. Now, that certainly has impacted across Forex, but also the gold chart as well, which is now breaking through a key support. But moving into this week, this US data that I think could be a key driver. Now, in terms of your Forex markets, the euro had that sort of breakout above $1.13, sort of coming back a little bit, just coming off the top a touch on Monday morning. But it'll be interesting to see if that sort of that corrective move that we've seen in the euro on Monday morning starts to find support around that sort of 113 area on euro dollar. Now, that would be, I think, a decent buying opportunity on a medium-term basis, and it's a decent breakout support around there. Similar sort of chart, I think you can say, on cable, but we didn't see the breakout. The big resistance at $1.3050 held pretty firm before the market just started to roll over a little bit on Monday morning. I still would be looking at sort of using weakness as a buying opportunity, I think, because as long as sterling continues to hold up above 127.75, I think you can still argue that sterling remains sort of more positively biased within this sort of trading range that it's formed. I think obviously the more sort of hawkish comments coming out of the Bank of England certainly helped sterling higher, and the subsequent dollar strengthening on Monday morning has helped to pull the market back. But will it sort of hold that support at 27.75? I think that's the key factor on this chart here. Now, in terms of your dollar yen, I think it is breaking out again. It is looking like it's going to be holding above that $111.55 to 112.20 sort of band of resistance that is now becoming supportive. Breaking out above 113 figure would open 114.35 again, which is the key resistance. So, looking on to the equity markets, well, we've seen the European markets starting to break down, forming top patterns. The FTSE and the DAX both formed top patterns, corrective moves, which sort of suggest a sort of a corrective sort of downward move in the next sort of few weeks, and it'll be interesting to see if that sort of filters through into the Wall Street markets as well, because S&P 500 has held up so far. 2,400 is the key support on S&P 500 that needs to break to form that top pattern, but it has held so far. The DAX has broken down below 12,490. That completed a top. FTSE broke below 7,378, and that completed a top pattern. So they're the sort of moves that we're sort of seeing there on these equity markets. Now, in terms of your commodities, it's interesting that the gold price is the big mover on Monday, breaking down below the support at 1240. That has sort of created a $20 sort of downside break of a range. That sort of opens up sort of key May low around that sort of 1214 area, and it looks as though rallies are being sold into. It's forming a new downtrend, and it's suggesting that this dollar strength is going to continue to sort of be a pull on that market lower. Certainly the improved risk sentiment from the PMIs this morning from China and also the Eurozone again are likely to play into that story as well. Now, the oil price has had a bit of a jump on Monday morning again, further rebound and recovery. The rig count in the States started to sort of, fell for the first time in several weeks on Friday, and it'll be interesting to see if that filters through into the inventories report, which continues to be a key driver of volatility, the EIA inventories report. So we're seeing this recovery in WTI back towards $47 as the resistance. On Brent crude, it's $50 as the big neckline of the breakdown, and those two levels could be tested in due course if this rally continues. So as I said, the key sort of factors this week are these PMI data that we've got. Is also is the RBA going to sort of follow this trend of more hawkish rhetoric out of the central banks? Not necessarily expecting too much out of the RBA, but certainly I think a little bit of a tweak perhaps towards a more positive outlook could well be seen. However, the main focus towards the back end of the week will certainly be this payrolls report, which I think the market's looking out for a pretty solid payrolls report. Average hourly earnings and a key as ever pretty much with this payrolls report at the moment. 0.3% would sort of help to stabilise the average hourly earnings around about the 2.5, 2.6% across the year-on-year basis. But also look for the U6 unemployment, which has fallen sharply to 8.3%, and if that sort of starts to sort of hover around that level, with unemployment again sort of flat around the 4.3% level, if we start to see the participation rate rising, we could see that the Fed feels the need that that is more of a tighter labour market that would sort of drive expectation of a rate hike in December again, which is still sort of 50-50 on the cards. So I wish you good luck in your trading, and I will speak to you again next time. Thank you.